How much do you need to put down to buy a house in 2025? So today I'm going to be covering a couple of the most popular loan programs that I see people use and what the minimum down payment is. There's so much misinformation out there. So I'm going to give you a little background just so you know, okay, I can trust this source. I've been a mortgage lender for 18 years. My team's one of the top purchase teams in America. So what we do every single day is we are looking at down payments with borrowers. We're looking at FHA versus conventional, conventional versus VA. We are comparing loans and looking at what's going to benefit you, the buyer, the most. I'm licensed in 48 states. If you want to get pre-approved, reach out. Okay, let's dig into it. Let's start with the easy ones. So VA is 0% down. A VA loan is for our active military members and veterans. In order to qualify for a VA loan as an active military member, you need to have served for 90 days. That's it. A lot of people don't know this. And yes, we can use your BAH to qualify. Very important. On this side, you have USDA. USDA is another 0% down loan. Now, here's the thing with USDA, because everyone goes, great, I'm not a military member, I never served, let's do USDA. USDA is only in specific parts of the United States. Every state has a pocket that's USDA eligible. It's generally going to be a more rural area. There are income limits and debt to income limits with this program that do make it very restrictive. So when I'm looking at all the different applications and qualifying buyers, this is the hardest one to get someone in. It's one of those things where it's like, you know, maybe they're under the income limit, but their debt to income's too high. Or maybe they're under the income limit and their debt to income's okay, but they can't find a house in the area. You know, it is a trickier one. When it works, okay? Now, you're like, okay, what do most people do, Jen? Most of the time what I see is conventional 3% down. So a lot of people think to do a conventional or conforming loan that you have to do 20% down. That's wrong. If you're a first-time home buyer, you can go all the way up to a loan amount of $806,500 for 2025 with only 3% down. Yeah, $400,000 house, we're talking about $12,000 down, okay? Now, if you're not a first-time home buyer, let's say you're selling a house and buying another one, the minimum down payment for conventional is 5%, okay? Still not bad at all. There are a couple parts of the country where they have higher loan limits above the 806, but in those areas, it's not going to be 3% for first-time home buyers. It will be 5%, okay? So the bottom line is this. 3% first-time home buyers. If you're in a special area, 5%. If you've already owned a home within the last 3 years, 5% with conventional, okay? Next, you have FHA. A lot of times people go, well, FHA is the best loan for first-time home buyers. No, it depends on your situation. So FHA is 3.5% down. And here's the thing, FHA, I really like it for a 2-unit. Like if you're buying a 2-unit property as your first house, I love FHA. You know, if you're a veteran, that's a different story. VA is always going to win. But if you're looking at conventional versus FHA, if I look at pricing, everything else for a 2-unit, I'm going to go FHA, okay? A lot of times lenders push people into FHA when they should be conventional. And what I hear a lot of is, I'll say to someone, because we'll check your loan estimate. If you're like, hey, is my lender doing me right? Like, is this good or am I getting hosed? Reach out to us, 786-933-2077. We don't charge you to look at it. You know, we always have these conversations. But I was talking to someone recently and I'm like, okay, why are you doing FHA? And he goes, well, it's 3.5 down and we don't really have a lot down. I'm like, well, what's your credit score? 800. Wait a second. If you have super high credit, 3% conventional is going to be the better loan, right? I'm going to be looking at FHA for a 2-unit. I'm going to be looking at FHA if your credit scores, you know, really 700 and under right now just because of how mortgage insurance can cost. Or if you have a higher debt to income. If you have a low debt to income and a really high credit score and a lender's putting you in FHA, it's suspect, you know? And that's one of the things you want to know is it's like, look, you want to know the minimum down payments for these loans, but then you also want to know why is the lender choosing this specific loan, and you want to make sure you're having those conversations. Now with FHA has loan limits as well, and it varies across the country. So it's going to be 3.5%, but you're going to have to look up the county that you're looking at and what their loan limit is. It can be a little screwy sometimes. You know, there's parts of California where just 10 minutes into a different county, you know, the loan limit's much lower. So that's one you're going to want to really watch in terms of loan limits and the 3.5% down. The next question is, okay, Jen, you covered down payment, but what about closing costs? Do I need to save 3%? Do I need to save 4%? None of those numbers are right. Nationwide, I'm going to tell you why. Some states are more expensive than others when it comes to closing costs. It depends if there's transfer taxes. It depends how much the title and escrow are. You know, I see huge variances like Maryland versus California, way more expensive, right? The East Coast in general is going to always be more expensive than Texas, California, you know, Nevada, Oregon, the West Coast. So if you're like, oh, I've got money for the down payment, but I don't have closing costs, so I have to wait. No, don't do that. I'm going to tell you why. What I see a lot of is the real estate agent can negotiate with the seller to pay closing costs. And that's what most of our clients are doing. Even the people who have money, lots of money, they don't want to pay their closing costs. They want the seller to pay it. So my recommendation is always going to be this. Make sure you have at least the minimum down payment for the loan program you're going for. FHA 3.5%, conventional 3 or 5, you know, VA 0, USDA 0. Make sure you have that down payment, but with closing costs, give us a call. Let's talk about what's going on in your market, because a lot of the time, I would argue most of the time, you can negotiate with the seller to pay for the closing costs. And the last thing you want to do is miss out on an opportunity because you talked to a lender or real estate agent that said, oh no, you have to have that. I am telling you right now, real estate is a negotiation. So as long as you have the down payment for the required program, okay, remember VA 0, let's try to get the seller to pay closing costs, okay? Depends on where you are in the country. So I hope this video is helpful. If you have questions, comments, hop on the calendar. Once again, 786-933-2077. Let's put together a game plan. The last thing we want to see you do, and I've seen people do this, like I know people who in 2019 are like, I'm going to wait to buy until I save 20%. Guys, look at what happened with housing prices. You know, saving up for a specific amount doesn't mean the rest of the market's going to stay flat waiting for you. So a lot of times while you're saving, you're losing out on potential appreciation, because even though the market is slower now than it was before, 2024 nationwide, the market still went up 5.8%. So anyways, I digress. Questions, comments, reach out. We're here to help.